today what I want to talk about is life insurance, and life insurance with regards to mortgage cover. So a mortgage is probably going to be one of the largest debts that you're going to have in your lifetime. And to protect that debt, we look at what's called mortgage term assurance, and that can be on a decreasing level or it can be on a level term. The difference between the two: decreasing is typically associated with a capital repayment mortgage, such as a residential, where every month when you're making a payment, you're paying off some of the capital. So those policies can be more cost effective because it pays out on event, so whenever that death arises during that policy term, and it'll pay the balance of the mortgage off. Whereas a level term policy is typically associated with interest only mortgages, so they can be buy to let, for example, or it can be a residential, but those will then pay out at a level term. So whenever that death arises during that level term policy, the full payout will happen. So say for example it was a £250,000 debt and the policy was for £250,000, it will give you a blanket £250,000. Now within those policies you can have multiple levels of benefits. Now the actual benefits you can get things like second opinion, you can get things like GP 24/7, so that's a 24-hour GP service. These are additions and these are extra benefits for some providers. Some providers do provide it within their actual policy itself. Speak to your broker, find out what's actually included in your policy. What we want to do is we want to offer you a free review. So if you are concerned about your policy, you want to have it updated, or there's been a change of circumstance, get in touch with us. We'll review your actual policy that you got, make sure it's right, because you might have done additional borrowing, you might have done a remortgage, bought another house, and not really thought about changing that policy. So when it comes to life assurance, when it comes to your mortgage protection, always review it on a regular basis. Whenever you remortgage, whenever you do a further advance, check the notional rate that the policy will be paying out at. Check things like waiver of premium, if you've got that on your policy, which obviously is, and the way I like to describe it is a policy, an insurance policy within a policy that pays if you can't pay your policy premiums due to accident or illness. Now, the reason to consider these things is because when you're buying your house, you've seen the house, you've got a surveyor that's gone around there, and the surveyor said, yes, the house is worth X amount of money. But no one really checks the foundations of a house. And these protection policies for the mortgage are really the foundations and the building blocks of you being able to stay in that house regardless of what life throws at you. And it's more so for your dependent family because it's a death policy. So if you don't have any dependents, fine, but you've put a deposit in, so you might want to leave that policy to your parents, sibling, etc. If you do have a partner and you do have a family, you want to ensure that if in the event you pass away, they have an asset, they don't have to worry about, say, the mortgage. So that's about it. It's just making you think about, look, there are policies out there, always get things reviewed, and then obviously we can take it forward and then get something in place, get it reviewed, etc. and so forth. Do give us a call once again, 0208 150 3719.